invoice and time of supply. As per section 31, we need to determine the due date of invoice. The due date of invoice is given under section 31 in this invoice and time of supply chapter. For invoice, we have total section 31, section 32, 33 and 34. These are the 4 sections related to tax invoice. And related to time of supply, we have section 12, then 13, 14. These are the 3 sections related to time of supply. So tax invoice, we are discussing first due date of tax invoice under section 31. So we have total 6 provisions. In case of goods, 3 provisions. In case of services, 3 provisions. In case of goods, section 31, subsection 147 deals with goods related provisions and 256 deals with services related provisions. So 31 subsection 1 is normal cases and 31 subsection 4 is continuous supply of goods and 31 subsection 7 sale on approval or on return basis. So in case of 31 subsection 1 normal cases, we need to see supply involves movement of goods, we need to take at the time of removal. Supply does not involve movement of goods at the time of delivery. So when supply involves movement of goods under the contract of supply, I am transporting goods from one location to another location, then it is on a supply involving movement of goods. So we need to take at the time of removal. For example, you place an order in Amazon and the product is packed on 15th January and you are receiving it on 20th January. So therefore, they have to raise invoice by 15th January. So then in case of door delivery contracts, we will take supply involving movement of goods. But when you go to the supermarket and you purchase a product, that is supply does not involve movement of goods. So at the time of delivery of the goods, they need to give you the invoice. So at the time of delivery. Then 31 subsection 4 in case of continuous supply of goods. Continuous supply of goods means there will be successive supply of goods for which the payments are settled on periodical basis. In case of continuous supply of goods, remember first whether the payments are received based on account statement or irrespective of account statement. If the payments are received irrespective of account statement, the payment received date. If the payment is received only based on account statement, then the account statement date will be taken. For example, I entered into contract with you to supply the chemicals through pipeline. Now in this case, so as per the contract, for every month you have to give 2 lakh rupees, and at the end of 3rd month, so that is for the quarter, I will be raising an account statement to you depending upon the usage, and I will be collecting the differential amount. Say for the first quarter, April to June. So April, May, June, 2 lakhs, 2 lakhs, 2 lakhs. So you have to give it to me. Then for the quarter, I raised an account statement to you. In that account statement, I have mentioned 6,52,000 minus 6,52,000 you need to pay. Now, first 2 lakhs, second 2 lakhs and third 2 lakhs is payable irrespective of the account statement. So the date when I am receiving the 2 lakhs will be taken as the due date of invoice. Whereas that 52,000 rupees is based on account statement. So even though you are paying that 52,000 later, but the account statement date will be taken. So therefore, if the payments are received based on account statement date, if the payments are received irrespective of the account statement, then the payment received date. So that should be taken. Then it is not whichever is earlier. Then next, sale on approval or on return basis. In case of sale on approval or on return basis, so usually the goods should have been returned within 6 months. If it is not returned within 6 months from the date of removal, it is deemed that the goods are sold. So therefore, the due date of invoice is 6 months from the date of removal or date of acceptance by the buyer, that is date of supply, whichever is earlier. So this is due date of invoice in case of goods. Then due date of invoice in case of services, 31 subsection 2 normal cases, if it is banking sector within 45 days from the date of completion, and if it is banking or insurance 45 days from the date of completion, if it is any other case 30 days from the date of completion. And 31 subsection 5 continuous supply of services. What is a continuous supply of service? A service which takes more than 3 months to complete and involves periodical payment obligations is known as continuous supply of service. Both the conditions should be satisfied. It should take more than 3 months to complete and it should involve periodic payment obligation. What if it takes more than 3 months to complete but entire amount is received in single payment? Then it is not a continuous supply of service, it will become normal cases. Then within 30 days from the date of completion or 45 days the invoice needs to be given. And in case of continuous supply of services, 3 situations are there. If the due date of installment is ascertainable from the contract, say for example by 15th March you have to pay this much, 20th March you have to pay this much and 31st March you have to pay this much, like that clearly dates are given in the contract, that date will be taken as the due date of invoice with respect to that component, that installment. Whereas due date of installment is not ascertainable from the contract, but the payment is linked to completion of an event. For example, upon 30% completion you have to pay this much, upon 60% completion you have to pay this much, upon 90% completion you have to pay this much. Whenever the 30% is completed, 60% is completed, 90% is completed, that is the due date of invoice, means date of completion. Then suppose if payment is not linked to completion of event and no due date of installment ascertainable in the contract, then as and when the installment amount is received. So 3 points. If due date of installment ascertainable from the contract, such due date of installment. If due date of installment is not ascertainable from the contract, then as and when payments are received. If payment is linked to completion of an event, as and when the event is completed. Then 31 subsection 6, cessation of service. Cessation of service means abruptly stopping the service. In that case, we need to give the invoice immediately upon cessation. Say for example, one actor has signed a contract to act in the movie for a period of 50 days with a remuneration of 1 lakh per day. So 50 lakhs is the remuneration. So now what happened here is that 10 days he acted in the movie and thereafter he quit movie. So means 1 lakh per day, 50 lakhs he need to get remuneration for 50 days, but 10 days only he acted, means he need to get 10 lakh rupees. So there is some proportionate amount he should get. For the proportionate amount, immediately upon cessation he need to raise the invoice. So immediately upon cessation with respect to the proportionate amount retained, they need to raise the invoice. These are the 6 subsections that we have with respect to due date of invoice under section 31, and subsection 3 is related to the general provisions. So 147 goods, 256 services, but subsection 3 is related to the general provisions related to both goods and services that we will see little later. Now we are moving on to time of supply in case of goods and services. Time of supply in case of goods is given under section 12 and time of supply in case of service is given under section 13. Now yes, CGST Act, all these sections are of CGST Act only, and here subsection 1 talks about liability to pay GST depends upon the time of supply, so which is common for both goods and services. Whereas 12 subsection 2 and 13 subsection 2, if you see, time of supply in case of FCM and goods FCM is 12.2, service FCM is 13.2, but the provisions are different. Situation is only same, but the provisions are different. Whereas 12 subsection 3 and 13 subsection 3, if you see, so services RCM 13 subsection 3, goods RCM 12 subsection 3. Situation is only same, but the provisions are different. And then 12 subsection 4, in case of vouchers. In case of vouchers, so both subsections talking about the same situation as well as same provision. Provision also same. Then subsection 5, residual cases. Provision is also same. Subsection 6 is situation, interest, late fee or penalty for delay in receipt of consideration. So provision also same, which means total we need to remember 7 points. How 7 points? So first, time of supply in case of goods FCM, time of supply in case of service FCM, time of supply in case of goods RCM, time of supply in case of service RCM, time of supply in case of vouchers, residual cases, and then interest, late fee, penalty for delay in receipt of consideration. If these 7 points we remember, time of supply under section 12 and 13 is over. Okay. So what are those 7 points? First, time of supply in case of goods FCM. Goods FCM 12 subsection 2. It is actual date of invoice or due date of invoice, whichever is earlier. What is the actual date of invoice? The date on which the invoice needs to be issued. What is the due date of invoice? Actual date of invoice is the date on which invoice is issued. Due date of invoice is the date on which invoice should have been issued as per section 31 subsection 147. So normal cases, continuous supply of goods, sale on approval or on return basis there, that will be taken as the due date of invoice. So due date of invoice or actual date of invoice, whichever is earlier, which means whether GST payable on advances in case of goods. No, GST not payable on advances because date of payment is not a date. For example, if the payment is received now and invoice is raised next month and due date of invoice also next month, means are we required to pay GST on the advance received this month in case of goods? No. But in case of a person opting for composition scheme, whether GST payable on advances with respect to goods, yes, because in case of a person opting for composition scheme, the time of supply in case of goods will be due date of invoice, actual date of invoice, or date of payment, whichever is earlier. So two provisions you need to remember. For a normal person, due date of invoice, actual date of invoice, whichever is earlier. But for a person opting for composition scheme, it is due date of invoice, actual date of invoice, or date of payment, whichever is earlier. Then in case of services under FCM, we need to check whether invoice is given within the due date. If invoice is given within the due date, then invoice date or payment date, whichever is earlier. If invoice is not given within the due date, then completion date or payment date, whichever is earlier. So what is the due date of invoice? Again, we need to refer to section 31 subsection 2 or subsection 5 or subsection 6 as the case may be. For example, invoice is given within 30 days from the date of completion, then invoice date or payment date, whichever is earlier. Invoice not given within 30 days from the date of completion, then completion date or payment date, whichever is earlier. Whether GST payable on advances in this case? Yes, because date of payment is one of the date. If payment is this month, invoice is next month, whichever is earlier. So this month we have to pay GST. So then in case of goods under RCM, we need to determine the time of supply from whose perspective? We need to determine the time of supply from the recipient perspective. So therefore, we need to see the date on which goods are received by the recipient, the date on which recipient is making payment to the supplier, or 31st day from the date of invoice, whichever is earlier will be taken. So the date of receipt of goods by the recipient, the date on which payment is made to the supplier, or 31st day from the date of invoice, whichever is earlier. But in case of services RCM, we don't have the date of receipt. So it is only the date on which payment is made to supplier, or 61st day from the date of invoice, whichever is earlier. And whether GST payable on advances in case of goods and services covered under RCM? Yes. So because date of payment is one of the date. For example, date of payment made is this month, but 61st day falls in the next month. So this month itself we need to pay, because whichever is earlier. So therefore, three places GST payable on advances. What are they? Services FCM, goods RCM, services RCM. Goods FCM also in one place we need to pay GST on advances, that is for a person opting for composition scheme. So whenever you are referring to section 12 subsection 2, so we need to also write read with notification number. Please write down read with notification number. Read with notification number 66 of 2017. Read with notification number 66 of 2017. Then, so here there is one query here. Services related to postal department, whether book post is taxable or not. In amendment PDF it is mentioned as exempted, but in that sit book it is not mentioned. No. So book post I did not mention there as exempted. So in amendments also clearly I said that is if the envelopes, it can be book post also less than 10 grams. So it can be book post, it can be registered post, any post, but the envelope should be less than 10 grams. Then it will be exempted. Okay, that's what I mean to say. So therefore, usually book post, registered post and all, definitely weight will be more than 10 grams. So therefore, it will be naturally be taxable. There the criteria is not which mode you are sending. The criteria there is about weight. Weight is less than 10 grams or not. Envelopes with less than 10 grams. Okay. Then next, and that incubating services also I did not mention here. So that after completion of this we will make note about that incubating services. See, because everything I cannot give in this small book. Okay, try to understand. And so I am adding like whatever extra points and all I am adding, because you know the moment if I increase the size of this to include everything like a main book, then what is the need of this book? The purpose will be defeated. So that's the reason why. And so that one point only missed in exemptions, that is incubating services, but otherwise everything is covered. So don't worry about this and see this. And also here, if you want to do this investigation like this book it is there, this book it is not there, so don't spoil my mood. So you message me separately, I will reply to you. Okay, but here try to focus first on whatever is there. And this book is not for 100 out of 100. Definitely no. If you are having any belief, see the book size once, and so 100 out of 100 if you are getting out of this book, are yaar, waste yaar, waste. So that is impossible, it will not happen. So therefore I cannot make a book in the last minute revision for 100 out of 100. Then I have to quit my regular batch, I have to quit my fast track batch, only rocket revision I have to make, and for this rocket revision itself I have to charge 25,000 rupees. So no, yeah, this is a revision. So kindly try to understand, this is a revision. I am doing it for free to you, my dear YouTube, those who are watching. So please don't complain that this is not there, that is not there, all these things. So this is for revision purpose. With that disclaimer only I started. Okay, please, you should have definitely attended the classes. Any faculty for that matter, every faculty is great, and any faculty you should have attended the classes. Then only this revision will be of any use for you. If you are thinking only by attending, because these idiots also, those who cleared last attempts and all, they will not keep quiet. They will come and they will post, sir, by attending your rocket revision only, you know, hey. So it's not true. It's not at all true, because they have attended classes, regular batch they would have attended, fast track they would have attended, with some other faculty they would have attended, and lastly they will see this rocket revision and they will be able to recollect all the provisions and they give the bloody credit to me. I don't need this credit. So they will say, by attending rocket revision only, sir, I got 60 plus marks. Then this is a false impression, false hope. Another student will be thinking, arre yaar, super, if we buy this That's It book for 350 rupees and attend 3 days rocket revision, so that we are going to get 60 plus marks. No, don't believe in that, please. You also don't believe in that. So I know many of you already attended the classes. So, but those who are believing that only 3 days, how we are, it is not possible. And I can still say that way, yes, by attending this you will be getting all those bullshit I can say, but end of the day my conscience will not agree. So tomorrow if that student failed, no, my next generation also he will scold. Okay, so therefore no. So coming back to this, in case of goods FCM, so total 4 provisions we have seen so far. Goods FCM, it will be due date of invoice, actual date of invoice, whichever is earlier. For a person opting for composition scheme, due date of invoice, actual date of invoice, or date of payment, whichever is earlier. Then in case of FCM services, invoice given within the due date, invoice date, payment date, whichever is earlier. Invoice not given within due date, completion date or payment date, whichever is earlier. Goods RCM, date on which goods are received by the recipient, date on which payment is made to supplier, or 31st day from the date of invoice, whichever is earlier. In case of services RCM, the date on which payment is made to supplier, or 61st day from the date of invoice, whichever is earlier. Then we have 12 subsection 4 vouchers. Vouchers are divided into 2: identifiable vouchers, non-identifiable vouchers. Identifiable vouchers means, so it can be redeemed against a particular product or service, and the product or service will be mentioned in the voucher, that is known as identifiable voucher. Whereas non-identifiable voucher means product or service will not be mentioned on the voucher, means that voucher can be redeemed against any product or service. In case of identifiable voucher, as the product or service against which it is redeemed is known or mentioned in the voucher itself, therefore it will be taken as the date of issuance of voucher itself will be taken as time of supply. Now in case, for example, you are coming to my shop and I am giving you one voucher, identifiable voucher. So next time when you visit, you will get one medium pizza free, like that one identifiable voucher I have given. Now in that case, today itself I should consider that the medium pizza has been sold and I have to pay GST. But you are not coming to my shop, you are not redeeming that voucher, then unnecessarily I paid GST. Will I get the refund? Yes, I will get the refund. So in case of identifiable voucher, if the voucher is not redeemed, but GST already paid at the time of issuance of voucher, treating that the product has been sold, so therefore we will get the refund with respect to the GST paid if the voucher is not redeemed. But in case of non-identifiable voucher, the time of supply itself is at the time of redemption of voucher. Suppose if the person is not redeeming the voucher, GST not payable. So refund question will not arise in that case. Then in residual cases, what should be taken as the time of supply? That is, in case of periodical return is required to be filed, the due date of filing such return. If the periodical returns are not required to be filed, the date of payment of the tax, this is like, so usually records are not maintained. So, but for example, a particular month, September month, so some transaction is identified in the bank account and there is no records related to that transaction. Now for September month, what is the periodical returns due date? So the due date itself will be taken as the time of supply. Suppose if that person is not required to file any returns, means what, he is an unregistered person, then whenever he pays tax, that date will be taken as the time of supply. Then in case of addition to value, so interest, late fee, penalty, so interest will always be taxable on receipt basis. So whenever interest is taxable, so when interest will be taxable, if it is other than loans, advances, deposits, means it is on account of delay in receipt of consideration, it will be taxable. Wherever it is taxable, it will be taxable on receipt basis, means only when it is actually received. How to collect that interest? For that we need to give one document called as debit note. So debit note or credit note will be given by supplier to recipient. So increase in the invoice value, debit note, decrease in the invoice value, credit note. So here, because of this interest, late fee, penalty, there is an increase in the invoice value. So for that reason, supplier should be giving a debit note and collecting it from the recipient. And one more important point is that in the absence of information in the question, interest is assumed to be inclusive of GST. Is it clear? That I am writing here itself. So interest assumed to be inclusive of GST. Interest assumed to be inclusive of GST. Interest assumed to be inclusive of GST. Okay. In the absence of information. Suppose in the question they are specifically telling that interest is exclusive of GST, you take it as exclusive of GST. And if it is clearly given that interest is inclusive of GST, you take it as inclusive. When the question is silent only, I am telling, always assumed to be inclusive of GST. And it will be taxable on what basis here? Receipt basis. Actually GST is on accrual basis, but only in this place, that is interest, late fee, penalty for delay in receipt of consideration alone, it will be taxable on receipt basis. So we completed section 12 and section 13, time of supply in case of goods and services. Now, in relation to this, we have some additional points. First, what will be considered as the date of payment? So date of payment, suppose if from supplier point of view, if you see date of entry in their books or date of credit in their bank account, whichever is earlier. From recipient point of view, if you see date of entry in their books or date of debit in their bank account, whichever is earlier. Now, in case of goods covered under FCM, whether GST payable on advances, no. But in case of services covered under FCM, whether GST payable on advances, yes. As GST payable on advances in case of services covered under FCM, if 1000 rupees is received in excess of the invoice, so that is generally invoice is for say 15,000 rupees and 15,200 rupees and the money received is 16,000 rupees. Now what is the excess amount received? 800 rupees. So for this 800 rupees, whether we need to pay GST this month? Yes. But this 800 rupees will be reflected in which month? Next month. So therefore, whichever is earlier, if you see date of receipt, that 800 rupees, date of receipt this month, but date of issuance of invoice next month, whichever is earlier this month, so we need to pay this month itself. But we have a relaxation. That relaxation says if the excess amount is up to 1000 rupees per invoice, is the excess amount up to 1000 rupees per invoice? Yes. So we don't have to take whichever is earlier, we can take date of invoice itself as the time of supply. So see that up to 1000 rupees received in excess of the invoice in case of services covered under FCM, time of supply can be date of invoice or determined as per section 13 subsection 2. The supplier has option to choose. So 13 subsection 2 is what? Invoice date or payment date, whichever is earlier. But you can take only date of invoice also as the time of supply. Then in case of supply between associated enterprises, associated enterprise as per section 92A of Income Tax Act, the 26% one rule is there na. So big list of transactions. So in case of import of services from associated enterprises, generally import of services, what will be taken as the time of supply? RCM. Import of services RCM. we need to take date on which payment is made to supplier or 61st day from the date of invoice, whichever is earlier. But in case that 61st day from date of invoice not there, then you cannot determine 61st day from date of invoice, because between associated enterprises there won't be any invoice concept. Due to that reason, they have given a special provision which says that date on which payment is made to supplier or date of entry in the books of recipient, whichever is earlier. You can see that in case of supply of services between associated enterprises where supplier is outside India and recipient is in India, time of supply shall be date of entry in the books of recipient or date of payment to supplier, whichever is earlier. Then when goods are taken outside India for exhibition, is it treated as supply? No, it is not treated as supply, because goods are just taken outside India for exhibition, because it is not 71A and even it is not permanent transfer or disposal of business assets. So 71C also will not be coming. However, if the said goods taken outside India for exhibition is not brought back within 6 months, then deeming fiction under 31 subsection 7 gets attracted, which says that sale on approval or on return basis within 6 months, if the goods are taken not brought back, then on expiry of 6 months it is deemed as supply and we need to raise the tax invoice. So that is this. Then we have 6th point. So as per section 33, tax component should be always shown separately in the invoice. So whenever we are preparing an invoice, so tax component should be always shown separately, even though we may fix a price inclusive of GST. But when we prepare the invoice, in the invoice, that breakup we need to show, that is excluding GST and what is the GST component as per section 33. Then we have time of supply in case of section 14. Change in rate, that is whenever there is a change in rate between 3 dates. What are the 3 dates? Date of completion, date of invoice or date of payment. Between these 3 dates, if there is a change in rate, and is section 14 applicable in case of both goods and services or only in case of services? Only in case of services. But when you see section 14 bare act, section 14 is actually applicable for both goods and services. But why it is applicable only for services? Because of notification 66/2017. That notification 66/2017 says that even in cases when there is a change in rate with respect to goods, the time of supply needs to be determined based on actual date of invoice or due date of invoice, whichever is earlier. So because of that reason, even in study material this point has been given, but fully they gave for both goods and services. Last in one corner they gave only for services, like that, okay. And student will read that fully and he will think, okay, for both goods and service it is applicable. In exam they will apply for goods also. No, don't apply. Only for services section 14 will be applicable. In case of goods it will be section 12 only, section 12 only. And in case of services, when there is a change in rate, between which dates there is a change in rate? Between 3 dates. What are those 3 dates? Date of completion, date of invoice or date of payment. So now suppose if date of completion is before change in rate, service is completed before change in rate, then we need to take invoice or payment, whichever is earlier, as the time of supply. So completion is before change in rate, then we need to take invoice or payment, whichever is earlier, date of invoice or date of payment, whichever is earlier, as the time of supply. Suppose if completion is after change in rate and both invoice and payment comes before change in rate, then whichever is earlier. If one is before, one is after, then whichever is later, okay. For example, say if the date of completion, if the date of completion is 15th March and change in rate is from 1st March, change in rate is from 1st March, date of completion 15th March, date of invoice is 25th March and date of payment is 31st March. So what will be taken as the time of supply? So time of supply, first of all, will it be determined under section 14? No. Time of supply will not be determined under section 14, because between these 3 dates the rate is same, because change in rate is 1-3 and after that only all these events have happened. Means between these 3 days there is no change in rate, so don't apply section 14. So you need to determine normally either 12 or 13. So now suppose if there is a completion which is before change in rate, that is 25th of February there is completion and change in rate is from 1st March. Now time of supply will be determined under section 14, yes or no? Yes. And what will be taken as the time of supply? So supply is before change in rate or after change in rate? Completion is before change in rate or after change in rate? Before change in rate. So therefore invoice date or payment date, whichever is earlier, will be 25th of March. Are you understanding this? Suppose if completion is after change in rate, say 25th of March completion, and invoice is raised on 20th of February and payment is made on 31st of March. Now, we need to apply section 14 or not? Yes, section 14. And completion is before change in rate or after change in rate? After change in rate. Whether both are before change in rate? No, one before, one after. So, whichever is later. Which is later? 31st March. So, that will be taken. Just 3 points you need to remember. Completion before change in rate. Invoice or payment, whichever is earlier. Completion after change in rate. Both invoice and payment before change in rate, whichever is earlier. Invoice or payment, whichever is earlier. One before, one after, whichever is later. And what should be taken as the date of payment? Generally, what is the meaning of date of payment? Date of entry in the books or date of credit in the bank account, whichever is earlier. However, if the payment is credited within 4 working days from the change in rate, then only we will take this for section 14. For section 14, we have a different meaning of date of payment. If the payment is credited within 4 working days from the change in rate, then we need to take date of entry in the books or date of credit in the bank account, whichever is earlier. If the payment is credited beyond 4 working days from the change in rate, only the date of credit in the bank account will be taken as the date of payment. So, these 4 working days you should always be observing. So, carefully when you are applying this section 14. So, date of payment is date of entry in the books or date of credit in the bank account, whichever is earlier, provided payment is credited within 4 working days from the change in rate. If payment is not credited within 4 working days from change in rate, don't take entry date, just the credit date. The date on which the bank account gets credited, that only will be taken as the date of payment. So, we completed 3 sections in time of supply. Section 12, time of supply in case of goods. Section 13, time of supply in case of services. Section 14, time of supply in case of change in rate. Now, look into this, various documents involved in GST. So, here tax invoice. Just now we have seen tax invoice. Who will be giving tax invoice to whom? Generally, supplier will be giving tax invoice to recipient. What is the time limit? Already we discussed that time limit. But only in one case, recipient will be giving tax invoice to supplier, which case RCM and the supplier is unregistered. 2 conditions. It should be RCM and the supplier is unregistered. Then in that case, recipient will be giving the tax invoice to the supplier. And tax invoice is issued in case of taxable supplies. What if it is exempted supplies? In case of exempted supplies or supplies by a person covered under composition scheme, then the name of the document is known as bill of supply. What is the time limit for bill of supply? Same as time limit for invoice. Whatever is the time limit that is applicable for invoice, the same is applicable. And who will be giving bill of supply to whom? Supplier to recipient. And bill of supply is applicable only to a registered person. Registered person, but who is making exempted supplies. Now, in case of low value supplies, what is low value supply? Value of supply less than 200 is known as low value supply. For low value supplies, neither tax invoice nor bill of supply is required to be issued, but provided 3 conditions are satisfied. What are those 3 conditions? Recipient is unregistered, means B2B or B2C? B2C. And then recipient is not in need of invoice. Recipient do not need an invoice, but a consolidated invoice or bill of supply should be generated at the end of the day. If these 3 conditions are satisfied, so neither tax invoice nor bill of supply is required in case of low value supply. What is a low value supply? Value of supply less than 200 is known as low value supply. In case of low value supply, tax invoice or bill of supply not required. In case of B2B or B2C, B2C and recipient do not require tax invoice, but all these low value supplies at the end of the day, we need to prepare a consolidated document for our accounting purposes. However, in case of entry to a multiplex theatre, even though if the value of supply is less than 200, but definitely e-ticket needs to be issued and e-ticket is considered as invoice. Okay, that is that note. Then debit note and credit note. Debit note and credit note is given under section 34. And who will be giving debit note and credit note to whom? Only supplier will give debit note and credit note to the recipient. When debit note will be issued? When there is an increase in the invoice value or increase in the tax. For example, I charge 12%, but the rate of GST is 18%. To collect that excess 6%, I can give a debit note. Or I have collected 1 lakh, but actually 1,20,000 needs to be collected. For collecting the 20,000 extra, I can give a debit note. Is there any time limit for debit note? Not specified, which means there is no time limit. So because of debit note, what will be happening to the supplier? What is the consequence of debit note to the supplier? Liability will increase. That's why no time limit. Okay. Then in case of credit note, what will happen? Liability of the supplier will decrease. So whenever the credit note is reported in GSTR1, that month the liability will come down. That's why there is a time limit. What is the time limit in case of credit note? So please change it before November end of next financial year. Before November end of next financial year or date of filing annual return, whichever is earlier. Before November end, 30th November of the succeeding financial year or date of filing annual return, whichever is earlier. And when credit note will be issued here? Credit note will be issued. Situation: whenever there is a reduction in the invoice value. For example, invoice value 1 lakh. I want to give a discount of 5,000 rupees. I can give a credit note. Or sales returns or reduction in tax. Reduction in tax. Okay. So these are the cases. Taxable value is coming down, or the tax is coming down, or sales returns, or where goods or services are both supplied or deficient. In that case, a credit note can be issued, and credit note cannot be issued in case of bad debts. That is specifically given in a circular, that in case of bad debts, credit note cannot be issued. So this credit note and debit note given by supplier to recipient, and time limit is not applicable for debit note, but time limit is applicable for credit note. Then credit notes and debit notes should be reported where? Supplier has to report it in GSTR1, let it be B2B or B2C, and accordingly they need to consider the tax adjustment in GSTR3B. And what is the consequence of debit note to the recipient? So based on debit note, recipient will be able to take the ITC, and based on credit note, recipient will reverse the ITC because his ITC balance will come down. Then revised tax invoice. So whenever a person is liable to get registered and he makes application for registration within 30 days, then in that case, from the date he is liable to get registered till the date he get the certificate of registration on their outward supplies, they cannot give tax invoice as and when supply takes place, because they will not get registration number at. So due to that reason, after registration certificate, within 1 month, they can give revised tax invoice for collecting GST with respect to outward supplies between which date? From the date they are liable to get registered till the date they get the certificate of registration. What is the time limit for giving the revised tax invoice? No, within 1 month, not 30 days, within 1 month from the date of certificate of registration. And what is the time limit within which application for registration should be made? Within 30 days. Okay. Now, what if the application for registration is not made within 30 days from the date they are liable to get registered? Then they cannot give revised tax invoice. Revised tax invoice cannot be issued if application for registration is not made within 30 days from the date on which liability to register arises. Why? Because the effective date of registration is the date on which they are liable to get registered if the application is made within 30 days. If the application is not made within 30 days, the date of registration certificate will be taken as the effective date of registration. So therefore, they cannot give the revised tax invoice in that case. So therefore, along with this, the effective date of registration also can be tested. So what is the effective date of registration? If application is made within 30 days, the date on which they are liable to register. If the application is not made within 30 days, the date on which they got the registration certificate. Then receipt voucher. Receipt voucher is in case of advances. That is, whenever we are yet to prepare an invoice and we received some money advance. So advance is any amount that is received before preparing the invoice is known as advance. In case of advances, so we need to evidence the receipt of advance. For that, supplier will be giving a receipt voucher to the recipient. So whenever advance is received by the supplier from the recipient. What if the payment is already payment is to be received after preparing the invoice? Then in that case, whether receipt voucher is required? No. So receipt voucher is required only if the payment is received before issuance of invoice. Then payment voucher. Payment voucher, who will be giving it to whom? Recipient will be giving it to supplier in case of RCM. whenever in case of RCM, recipient is making payment to supplier, recipient will be giving a payment voucher to the supplier. Then refund voucher. Refund voucher is connected to receipt voucher. That is, first I received advance and supply is not yet made. The advance needs to be returned. For returning that advance, a refund voucher to be given by supplier to recipient. And delivery challan. Delivery challan is a document that is accompanying the goods whenever there is movement of goods without supply. For example, goods sent on job work basis or goods sent from one place to another place, not between distinct persons like head office to branch office, not having separate registrations, then it is not a supply. Or any other case when there is movement of goods without involving any supply, including sale on approval or on return basis, etc., then that movement of goods should accompany a document called as delivery challan. Then what is the difference between receipt voucher and refund voucher? Suppose before the date of invoice, if the payment is received, that is called as advance. In case of advance, supplier shall issue receipt voucher to the recipient. And on this advance, whether GST payable. If it is goods, GST not payable, but if it is services, GST will be payable on advances. Now, on the date of invoice, so anyhow time of supply is invoice date because payment is not yet received, balance amount not yet received. Now, what if the payment is received after the date of invoice? Then whether receipt voucher is mandatory? No, but supplier may issue a receipt voucher. But here supplier shall issue a receipt voucher. Then before the date of invoice, if the amount is refunded, then what supplier will do? Supplier has to give one document called as refund voucher. But with respect to goods, GST paid? No, not yet paid. So no question of refund. But with respect to services, already GST paid. Can they get a refund? Yes, they can get a refund. Refund claimed equals to GST paid. Suppose if prepared invoice is prepared, thereafter the amount is refunded, then in that case what will happen? If the amount is refunded after preparing the invoices, two options are there. Either give a credit note. If you give a credit note, automatically liability gets reduced. But credit note has got a time limit. So within that time limit we need to give. What if we cross that time limit? We cannot give credit note. Does it mean whatever tax we pay to the government, we will not be able to get any benefit? No, we can get the refund of that under excess payment of tax. So there are two options available. If the amount is refunded or supply is cancelled after preparing the invoice, either they can give a credit note. Whenever credit note is issued, liability gets reduced, or they have another option, that is refund can be claimed. So what is an alternative to credit note? Refund. But credit note is advantageous because in the same month in which credit note is reported, the liability gets reduced. But refund, they have to make an application and they need to wait for statutory time limit of 60 days, and thereafter they will be getting the refund. If they get the refund, thereafter they will get an interest of 6% per annum. Okay, so therefore that will be a headache, and that's the reason why credit note. If credit note is not possible, yes, we have an alternative called as refund. Then next, HSN code in invoice. Usually, then one more point is there below that, section 32. An unregistered person is not supposed to collect GST from the recipient. So section 31 we have seen tax invoice. Section 32. So if you are unregistered person, you are not supposed to collect tax. If you collect a tax, that is a prohibition. Okay, that is violation of section 32. Then section 33 we discussed. What is 33? Tax component should be shown separately in invoice. Section 34 also we discussed debit notes and credit notes. Okay, and we have some more aspects. HSN code in invoice. Usually in invoice we need to mention this harmonized system of nomenclature code, which is a 8-digit code, but not entire 8 digits we need to enter. If aggregate turnover during the previous year does not exceed 5 crores, we need to enter 4 digits, that too only in case of B2B, not in case of B2C. If the aggregate turnover during the previous year exceeds 5 crores, then we need to enter 6 digits for both B2B as well as B2C. And for services, that code will be called as service accounting code, and it will always be a 6-digit code, and there is no relaxation. Full 6 digits we need to enter. Then we have two concepts, that is e-invoice and dynamic QR code. What is e-invoice? That is for a normal invoice, when we are uploading it into the invoice registration portal and obtaining 3 things, then it will be called as e-invoice. What are those 3 things? Invoice reference number, QR code and digital signature. Then that normal paper of invoice will be called as a e-invoice. So when a normal invoice uploaded into the portal and arrived 3 things, invoice reference number, QR code and digital signature, it is called as a e-invoice. In which portal we need to upload the data? Invoice registration portal. And so then we have this e-invoice is applicable to whom? B2B or B2C? Only in case of B2B supplies, not in case of B2C. That too, if aggregate turnover in any previous year from 2017-18 to 2021-22 exceeds 10 crores. So previously the limit was 20 crores. Now they have been revised it to 10 crores. So therefore, if aggregate turnover during any previous year, from which year to which year? 2017-18 to 2021-22 exceeds or does not exceed? Does not exceed 10 crores, no need to give e-invoice. So only when it exceeds 10 crores, e-invoice is required in case of B2B supplies. And there is something called as dynamic QR code. Dynamic QR code means whenever we are collecting the payment from the recipient, by scanning the QR code only we need to collect the payment, and that QR code also not a static QR code, it will be dynamic QR code, which means the moment you scan it, the amount also will come, we can directly make the payment. But static QR code is when you scan, you need to enter the amount. But dynamic QR code and all, the moment you scan, the amount also will come, that is called as a dynamic QR code. But to whom this dynamic QR code concept will be applicable? It will be applicable for B2C supplies for a registered person whose aggregate turnover in any previous year exceeds 500 crores. 500 crores, okay, in any previous year. So therefore, that is the connection between this. But remember, in case of e-invoice, one QR code is there. Is this QR code and dynamic QR code has got any link? No. This is generated by the portal, and dynamic QR code will be given by the payment gateways. Payment gateway or third party applications or banking system, etc. They will be giving dynamic QR code. So not portal. Portal will be giving only e-invoice. In that e-invoice, one QR code is there, that will only be given by the portal. Now, so this aggregate turnover in any previous year between 2017-18 and 2021-22, if it does not exceed 10 crores, so for B2B supplies, e-invoice not required, B2C supplies, dynamic QR code not required. Suppose if it exceeds 10 crores but does not exceed 500 crores, for B2B supplies, e-invoice required, and for B2C supplies, dynamic QR code is not required. If it exceeds 500 crores, for B2B, e-invoice, for B2C, dynamic QR code in invoice. And invoice should be prepared in a prescribed format, that is INV1. And suppose if my aggregate turnover in any previous year does not exceed 10 crores, even then can I prepare e-invoice? Yes, it is optional. And whenever I prepare a e-invoice, what is the advantage of that? The data will be automatically going into GSTR1 and e-way bill portal. Then whether physical copy of the invoice is required when e-invoice is generated? No. Generally physical copy of the invoice is required, na? Original, duplicate, like that. So whether that should be carried when e-invoice is applicable? No. Physical copy of invoice not required in case where e-invoice is applicable. And QR code can be produced before the proper officer for verification. Type of transaction for which e-invoice is required? Outward supplies. All outward supplies. For inward supplies and all, e-invoice not required, only for outward supplies, because we have seen one place where invoice is prepared by recipient to supplier in case of RCM when the supplier is unregistered. There and all we don't have to prepare e-invoice, because only for our outward supply e-invoice is required. Then zero rated supplies, that is export of goods or export of services, supply of goods or services to SEZ. Then debit notes and credit notes. So for this only we need e-invoice. Then there is something called as dynamic QR code. So we need to enter these 5 fields and we need to generate one QR code, that is called as a dynamic QR code. What are the 5 fields that should be there? Supplier GSTIN, which is static, no change. And UPI ID of the supplier, no change, static. And bank account and IFSC code of the supplier, static, no change. But invoice number and date will change, and invoice amount with breakup of value and tax, that will also change. So therefore, entering these 5 fields, if we create one QR code, that is called as a dynamic QR code. And what are the exceptions of UPI ID for supplier? whenever the payment is not directly collected by the supplier but collected by e-commerce operator, then that e-commerce operator's UPI ID should be there, or collected by a courier agency, that courier agency UPI ID should be mentioned. So payment collected by ECO or any other person, UPI of such ECO or other person should be mentioned. Then bank account and IFSC code of the supplier. If UPI is connected to the bank account, then no need to enter the bank account and IFSC code of the supplier. So generally all UPIs will be connected to the bank account? No. So because if you are having account in a bank and if that bank is giving you UPI ID, so then it will be the case where your bank account is connected to UPI ID. But suppose if you are not having bank account with that particular UPI ID provider, for example, I have a UPI ID with OK Access and I don't have bank account with Axis Bank at all. I have bank account with some other bank, and therefore this OK Access I don't have, means my UPI ID is not connected to my bank account. So that is this. Then invoice number and date. Invoice number and date exception is like usually invoice number and date. So we cannot enter in case of retail transactions, because in retail transaction there will be multiple counters and parallelly everyone will be preparing the invoices due to that reason. So in case of retail sales, just a unique reference number if it is attached, that is sufficient. Then invoice amount with breakup of tax. So first of all, this dynamic QR code will be applicable only when the payment is received before invoice. If the payment is received after invoice or before invoice, when dynamic QR code will be applicable? Only when the payment is received after preparing the invoice. If the payment is already collected, then dynamic QR code is not required. Dynamic QR code is only for collecting the payment. So therefore, in invoice we need to mention dynamic QR code. Then when the payment should have been collected? After preparing the invoice. So therefore, if the payment is received before or at the time of generating invoice, and cross reference of such payment received is mentioned, even if it is cash receipt, that date on which cash is received is mentioned in invoice, then we don't have to prepare a dynamic QR code in invoice. Is it clear? Now, say for example, two payments are received. One is advance and the other is balance amount. Advance is before invoice and balance amount is after invoice. So therefore, in dynamic QR code, which amount should be mentioned? Balance amount. So part amount received before invoice and remaining after invoice, and only the balance due should be mentioned here. Okay. Then one more point. Generally, in case of export of goods or export of services, we need to have e-invoice. Okay, e-invoice. Export of goods or export of service, e-invoice. In other cases, we need to collect the payment by scanning the dynamic QR code. What if our customer is located outside India? B2C. Our customer is located outside India, it is not export of goods or export of services, and he is remitting the money to us. Now, whether UPI and all will work there? No. So due to that reason, so what they are telling is that dynamic QR code is not required. Please see this. Location of supplier in India, location of recipient outside India, place of supply in India. So it is not export of service, correct? Correct. Because where the place of supply should be? Outside India. And payment in convertible forex, it is not an export of service. When it is not export of service, no invoice. When there is no invoice, dynamic QR code may come. So that's why they are telling dynamic QR code also not required. Okay. Then next, there are few cases e-invoice and dynamic QR code in invoice is not required. What are they? E-invoice is not required in case of biggest. Don't write biggest and write there the answer. Huh? Don't write. Because in one attempt, one student came to me and he told me, sir, whatever you said, I wrote that only, sir. I did not get marks. I asked, what you wrote, what I said, like that. Sir, you said, who are not required to give dynamic QR code, like that one question came. And you know what he did? Big toe, B for, I for, like that he wrote. Okay. If you write like that, you will never get marks. This is only to keep in your mind, and the drip and all don't write. Spelled slow, drip, MMTN, USAM, MMTN, ASAM. See, these are all some mnemonics for the purpose of remembering in your mind. But exam when you are writing, that elaboration only you need to write. Okay, please. So then there is no point in, all these things. So, e-invoice is not applicable in case of biggest. B for banking company. I for insurance company, and G for goods transport agency. Another G is government company or government or local authority. Then E, exhibition of film in a multiplex theater. Yes, SEZ unit, not SEZ developer, SEZ unit. And T, transportation of passengers by any mode. So these people, even though their aggregate turnover exceeds 10 crores, but e-invoice is not required to be issued. Then in case of dynamic QR code, it is big toe, that is the same biggest. S is removed and O is added. What is O? OIDR supplier. B same, banking company. I for insurance company. G for GTA, another G for government or local authority, and T for transportation of passengers any mode, and O is OIDR supplier located outside India making supply to non-taxable online recipient in India, and E is also same, exhibition of film in a multiplex theater. Then this is the e-invoice process. So just for reference purpose, so first step number 1, you see what happens is that, so a taxpayer will prepare a normal invoice using his billing system or ERP system that will be converted into one file called as .json file, that is JavaScript object notation. Then he will be uploading that into invoice registration portal, and invoice registration portal will do a deduplication check and it will be affixing 3 things. What are the 3 things? Invoice reference number, digital signature and QR code, and from there it will be sent to the GST system and e-way bill system. And thereafter, so in the GST system, GSTR1 of the supplier gets updated and GSTR2B of the recipient gets updated, and buyer can check the authenticity of these invoices by entering the QR code or the digital signature or the invoice reference number, just to know whether this is a valid invoice, genuine invoice or not. So this is the e-invoice process, but there is one important note which you need to remember. If a supplier is required to give e-invoice but not issued e-invoice and issued a normal invoice, then recipient cannot avail ITC even though such invoice is reflected in 2A or 2B of the recipient. Okay, remember this. That is, I am required to give e-invoice, but instead I gave a normal invoice. Now I may be reporting it in GSTR1, it may come in your 2A, 2B, still you cannot take ITC because I have not given the e-invoice. Then, so please take that exemption. So we completed invoice and time of supply. In that exemptions, one point, we have not discussed, that is incubating services. Recipient should be aware. Turnover is something which is openly available. My supplier's aggregate turnover is something which is openly available. Know your GSTIN. There I have to enter and know my supplier. And my supplier, if he crossed 10 crores, see 10 crores if they cross, they are eligible to give e-invoice, like that is there, na? That we know. Because we cannot say, I don't know that provision. Ignorance of law is of no excuse. So definitely we should be knowing it. Okay. But turnover of the supplier, if it crosses 10 crores, then he need to give e-invoice. If he is not giving, bloody idiot, you give e-invoice. Like that we should ask. Okay. Then, see this. Page number 88, you just write down incubating services, incubating services exempted up to 50 lakhs, exempted up to 50 lakhs. And what are the conditions? What are the conditions here? Condition number 1, previous year gross receipts. Previous year gross receipts should be less than or equals to 50 lakhs, and exemption for a period of 3 years. Exemption for a period of 3 years from the date of signing contract. From the date of signing contract. Then next one, incubator services. Incubator services divided into two: approved by government, not approved by government. Approved by government. If they are approved by government, fully exempted, and not approved by government, not approved by government, then it will be taxable. So there is one query here. Sabhas take sponsorship for December season program. They also pay performing artists. Though the artists are not performing in the capacity of a brand ambassador, is their payment still taxable? No, they are not performing as a brand ambassador, because see, Sabhas and all, mainly it is for recreation. They may take some sponsorship. That is not I mean to say. I mean to say the event itself is organized by the sponsors. So that means it is like promoting a brand. For promoting a brand, they will be doing it. Then it will be coming under brand ambassador. But one Sabha or one cultural event, etc., there we are doing. There they may take some sponsorship money and all. That does not mean promoting a brand. Then, sir, in interior of new house for first time, if all materials is bought by owner and only interior services or carpenter service is received, will that also be exempted from GST? No, interior service will not come, only construction services. So we don't have interior services into that list of exemption. It is only the construction service. Okay. Thank you. In excess of 50 lakhs, the excess only taxable. Okay. So suppose that is what I said in everywhere in exemptions chapter. If the amount exceeds that limit, entirely it will be taxable. But only in case of incubating services, if it exceeds 50 lakhs, that excess only will be taxable. Okay. And if you have any queries, you can ask.